At August intraday low, the S&P 500 was down 5.5%. We're only down 1.5% now. So we've kind of scratching and clawing our way back.
We talked about the other day, the most important data point is what's going on with bonds, what's going on with the 2-year and what's going on with the 10-year.
Right.
And what drives bonds? Economic data. And the economic data, unlike what the Atlanta Fed is saying is going to happen later on in the year at 6%, which now we know that's not going to happen, continues to get softer and softer. And so this is good news for the economy right now, as long as we can continue to glide down and then flatten out.
Soft news is good news, right? I mean, yields, to your point, the 2-year lowest level since August 11th. The 10 years back, we just showed it, 410, bottom of your screen. Wasn't that long ago, Joe, that we're talking about, north of 430 on the 10-year. Market, yields start to run. Market gets nervous. As we said, S&P was down 5.5%. The NASDAQ was down 8.2% at its August low. It's only down 2.2% now. So everything's kind of rallied back, whether it's small caps, Dow, NASDAQ, S&P.
Yeah, first of all, what I like about today's price action is that we really did not go back deeply into yesterday's trading range. So that creates a degree of validity in the move higher. Basically, we pierced into the range yesterday, and we've maintained that and bounced from there. It is, to Bryn's point, it's all about yields. It's all about the fact since Monday, a 2-year was 5.10. Now you've got a 2-year at 4.86. What has that done to expectations for what the Federal Reserve is going to do? As we sat here on Monday, there was a 75% probability of another 25 basis point rate hike from the Federal Reserve at some point this year. As we sit here today, that is now down to less than 50% probability for another 25 basis point.
Let's see what PCE does tomorrow, right? We can't get too far ahead of ourselves because we need that report to come in a way that investors view it as favorable for what the Fed's going to do, and also one that doesn't start pushing yields back up.
Without question. Without question, you should not look at the price action in the last 3 days and say, okay, case closed. We understand the Federal Reserve now kind of sits back and waits, and we feel as though all the data has gone in the way of the bulls. No way. The price action, though, since Monday should be encouraging. Why? Because what it is suggesting is that the deeper correction thesis that was so dominant in the middle of August.
Pervasive in the middle of the month, right?
Right. And this is more consistent with a more normalized 5% at its step type of correction.
Sherry, bottom line is this is exactly what the Fed and investors want/need. Right? You need growth to still remain nice, reasonable, not too crazy, not too hot.
Right,
Today you get, the picture from ADP and some other economic data, which suggests, okay, it's cooling a bit, which is exactly what the doctor
ordered.
Jay Powell ordered.
It's better than expected. And last week, I remember talking about how a decline of 3 to 5% was healthy. And we talked about what is healthy. I mean, everybody says it's healthy until they start to feel sick to their stomach.
Yeah, right.
Yeah. So far, I mean, I feel that this has been more healthy than sickening. And Jay Powell scared some people in his tone the other day, but it really made other investors feel comfortable. I think for us, it was comfortable. And the PCE number continues to come down. I think there's no question that he's on the track that he believed he would be able to maintain. We don't have a recession. We haven't had a recession. And 3.5% unemployment is not a case where you're generally going to have a recession pop up and crush earnings. Earnings growth, I think, becomes the thing people have to worry about and care about.
Let's also put in perspective, too, this idea that, the fall is historically bad, September, October, historically bad for stocks. Yes, that's true. But the caveat being that when August, or when you make it from the beginning of the year through August the way we have, not so much for a bad September, which is one of the reasons why Tom Lee suggests you're going to get 2 to 3% gains this month. Morgan Stanley, one of their PMs had a note out or an interview on Street Signs Asia, CNBC Asia, that the S&P is going to get closer to 5,000 by the end of the year. We recaptured 4,500 today. We're at 4,524.